Shareholder insurance, also known as key person insurance, is a type of insurance that protects a business from the financial loss that would occur if a key shareholder or employee were to die or become disabled. This type of insurance can provide funds to purchase the shares of a deceased or disabled shareholder or key person, recruit and train a replacement, pay off business debts, or fund a buyout of the deceased or disabled person's interest in the business. Here are 6 reasons your business needs this insurance. A key person is often a vital part of the company's operations, and their absence can lead to decreased productivity, lost revenue, and even bankruptcy. Shareholder insurance can help mitigate these risks by providing funds to cover the costs of replacing the key person or purchasing their shares. The insurance provides a peace of mind by knowing there is a plan in place in case of the unexpected loss of a key person, and can help to alleviate the stress and uncertainty of that situation. The amount of shareholder insurance needed is based on the value of the shares to be purchased in the event of the death or disability of a key person. This can be determined by consulting with a financial advisor or by conducting a valuation of the business. Loss of income that could occur is determined by the key person's salary and their role in the company, as well as the costs associated with replacing them. This calculation impacts how much insurance is needed. A business that is in a strong financial position may be able to handle the loss of a key person without the need of a large insurance policy. On the other hand, a business that is struggling financially may require a larger policy to ensure that it survives the loss of a key person. In addition to these factors, it's also important to consider the tax implications of shareholder insurance. Insurance policies that are used to purchase shares in the event of the death or disability of a key person are typically tax-free. However, policies that are used to provide income replacement may be subject to taxes. It's important to consult with a tax advisor to determine the best course of action. Shareholder insurance is a critical component of any business plan. By providing funds to purchase shares, recruit and retrain a replacement, pay off business debts, or fund a buyout, shareholder insurance can help a business to remain operational and financially stable in the event of the loss of a key person. It is important to consult with a financial advisor and a tax advisor to determine the appropriate amount of shareholder insurance your business needs.